Started. Good evening, everybody. Good evening, community members. We're happy to have everybody on the call this evening. Joining us this is our third session for the free tax training in August. And we are glad to have Perpetua on the call. I'm sure most of us would have come across, we are very active on LinkedIn, but have come across our posts one way or the other. And today she'll be taking us on the ABC of payroll. So PAYE, computation, the basics of payroll computation and the like. So I'll be reading our profile shortly. My name is Oyindamola Adeleye. I'm the founder of Accounting Job Up Consults, which is shortened AJH Consults. So at AJH Consults, we are a consulting firm. So we have two sides. We have the training side and the business consulting side. So the training side is we equip finance professionals to be able to compete on a global scale, like through trainings, providing resources, vacancies, and a lot of things to equip them to be able to compete on a global scale, basically. Then on the business side, so we do consulting, preparation of management accounts, then tax, audit, and other solutions to the business problems that they might be facing, basically. So shortly, I'll be reading the profile of our trainer today. We are so glad to have her on the call today, and we don't take our presence here for granted. So Perpetua Badejo is an accomplished and ambitious professional with a strong background in accounting and taxation, with over 4 years experience in financial reporting and management accounting. Her career journey showcases a remarkable dedication to her field, starting at a young age with her pursuit of accounting qualifications. She's an associate ACA of the Institute of Chartered Accountants of Nigeria, and also she's a CITN holder, which means that she's an associate member of the Chartered Institute of Taxation of Nigeria, CITN. At the age of 16, she began an accounting career by taking ICANN ATS 1 to 3 exams. At the age of 20, she went on to pass all of the stages of the professional level exam. She was able to enroll in the University of Benin's 200 level accounting department through direct entrance owing to her AAT certificate, and she graduated with a first-class degree while simultaneously completing the management accounting course, where she won the Best Student Award. She was also named the Best Junior Secondary Student in Lagos State and received the ICANN District 2 Scholarship Award. Perpetua is passionate about expanding her knowledge, and so she takes in a variety of certification training courses and seminars in areas relating to data analysis, health and safety, financial modeling, and more recently, a certification from the Deloitte School of Tax. She gained extensive experience in a consulting firm, worked for an oil and gas servicing company, and later moved on to join a multinational FMCG, serving in the organization as an accounting and tax associate. So she currently works as a finance and tax associate with a trading fintech company. So we are happy to have such a wonderful personnel on the call today. So I'll be handing over the meeting to Perpetual to take us on today's training. And as usual, the rules of our meeting, as you are joining the call, kindly mute yourself. And also, nobody will be unmuted to ask questions. All your questions should be in the chat room, please, to provide decorum in the training and to also allow our speaker to be focused and concentrated in today's class. So I'll give the floor to Perpetua to start the training. Thank you, Perpetua, for having us today.
Okay, good evening, everybody. Thank you so much, Oyindamola, for this opportunity. I mean, I was really smiling while you're reading all the stuff about me. Thank you so much. It's really a pleasure to be here to take this training. Okay, so for us to start, I would like to hear from us. I want us to go to the chat box and then drop our expectation. What are your expectations from this training? What are the knowledge gap you hope that this training would fill? What are the questions that you have? What are the expectations generally? Just please drop it in the chat box so we can all read and know if we'll be able to meet that or not. Thank you. So I'll be waiting. So just go to the chat box and just drop your expectation. Okay, good evening, Uraola. Okay. Please let's keep the messages coming. Oh, you can't hear me? Um, can anybody else confirm if they can hear me? Because Rukayat said she can't hear me. I don't know if it's your network or from my end. Okay. Okay, thank you. Okay. Um, okay, so Onyidamola said, we would like to know how to prepare payroll perfectly. Okay, that is fine. Okay, we are here to gain more insights in the world of finance. That is very well. Thank you, Uche. Okay, you can hear me. That is fine. Thank you as well. Okay, so let's just take like two or three more. Expectation. Okay, practical aspect of payroll preparation. Okay, that's fine. Would like to know the recent changes to payroll preparation. Okay, that makes sense. Thank you, Esther. Wasio, okay. Good evening, Perpetual. At the end of the training, I will be glad to broaden my horizon in the area of taxation, generally from PAYE, VAT, and WHT. Um, can you please mute your mic? I don't know who that is. Okay, thank you. Okay, so Wasil, for today's class is really focused on just payroll. You might not be able to learn so much. You might not be able to learn so much about VAT and withholding tax here in this particular training, but trust me, you might as well just follow me on LinkedIn. You'd see a couple of posts that I've made on VAT and withholding tax, but you would definitely learn something about pay. That I can assure you. Okay, good evening, Perpetual. My expectation, insight on payroll management. Adidayo, okay, thank you. My expectation is to know how to compute payroll perfectly in line with pay. Okay, that makes sense. Thank you. How to reduce tax legally. Okay, interesting. Okay, I expect to have an in-depth knowledge in VAT and withholding tax computation as well as payee. Okay, just like I said earlier, you might not be able to get knowledge of VAT and withholding tax into this training. Okay, not expecting to learn and gain more knowledge. Okay, thank you. Okay, I think I will just stop here. We would like to know how to compute relevant taxes in oil and gas and fintech industry. Okay, I hear you, Precious. I hear you, Precious. Okay, but for today's class, we'll be sticking to just payroll. So thank you very much. Thank you all for your feedback. I mean, it's really nice having an insight into the kind of expectations we came to this training with. Okay, so let's not waste time. I will just dive into the class. Um, okay, so just give me a minute. Let me just try and project my screen so I can talk through the slides. Okay, so just a minute. I mean, just have to do this. Okay.
Okay. Let's hold on till she's able to sort it out. I think probably it's a network, but please let's still hold on, please. Thank you, everybody. And yes, she's not speaking now. Some people are saying they can't hear anything. She's not online now. I think she's trying to connect and what's the word now? She's trying to project her screen. So let's still hold on, please. So in the meantime, you can be dropping questions you have about PAYE in the chat box. So that when she comes on, okay, she's
Okay.
online. Okay,
So
she's
sorry,
online.
I had to make like a couple of settings changes on my laptop. So you had to log me off and log me back in. Apologies for that. Okay, so let me just try to share the screen now. Okay, it's working. Thank you. Okay. Please confirm if you can see my screen. Let me know when you can see my screen.
Confirm.
Okay, okay. So thank you very much, everybody. So today we'll be talking about the ABC of payroll computation. So for this training, we're going to be assuming like a zero knowledge approach. So I'll be assuming that I'm speaking to people that have like zero knowledge about what payroll is. So what that means is no question is too basic to ask. If I'm using a terminology that you feel like you don't have an understanding of what it means, please just feel free to ask me any question. So we're assuming that this course is going to take you from like even a non-accounting person from this class, we'll be able to understand how to prepare payroll and how it works. Okay, so the next question that will be on top of everybody's mind is what is actually payroll? What is a payroll? So a payroll file is a document that shows how employees of an organization are being compensated for their effort toward the organization. So a payroll file is that document that shows the number of employees a company have, the number of hours they worked, how the allowances you gave to them, the benefits in kind they got, the various deductions they got, the net pay they got, and all of those information that has to do with reward system. You find them in a payroll. Then the payroll system in any organization is usually managed by either the finance department, the human resource department, or outsourced, right? So in like big companies, like multinational companies, you would notice that most times their payroll is usually outsourced to like an external party. But in most SMEs that have worked, you would realize that the payroll actually sits with the finance. So the HR only come to tell you that, oh, this person has left their employment, please pay them half. Okay, this person committed a crime, or this person did something, the company don't pay them in full. But the whole preparation and filing and remittance and all of that, it sits with the finance department. And that is why it is very, very important as an accountant, you understand how this payroll system works. You're able to prepare a simple payroll. So now this training might not go into like very, very in-depth, but it gives you like the basics. So I remember there was a time that I went for an interview and they asked if I could prepare like a payroll, and I said yes. And then they were asking me like questions about consolidated relief allowance and things like that. So I was able to answer the question because even though where I was working as a then, I was not preparing a payroll, but I had like general knowledge of what these things entails, and that's like the reason for this training. Even if you know that you maybe in your current role you're not preparing payroll, but you never can tell where this knowledge will become relevant to you. Okay, so the payroll computation is governed by various laws such as the Personal Income Tax Act, the Labor Act, the Pension Reforms Act, Employee Compensation Act, and Industrial Training and a couple of other laws like that. Okay, so let me move to the next slide. So what are the components of a payroll? If you pick a payroll file, there are 4 components there. The first component you will see is the employee information. So on every payroll, you will see information about the employee name, the residential address, their telephone number, their taxpayer ID, their pension PIN. I mean, some might even have like date of birth. It varies depending on what the company wants to see. But like the basic information that you see are like employee name, the taxpayer ID, and the pension PIN. Those three ones are actually very, very important on any payroll. Then the next thing you would see on the payroll is gross pay. So on the payroll, you will see like a breakdown of how much this particular person, how much the company is paying this person in terms of their basic pay, their transport allowance, their housing allowance, their feeding allowance, all of the various allowances that the company is giving to them that makes up the gross pay. You're going to see like the breakdown in your payroll, such that if an external party comes and they're like, oh, let me see how you reward your employees, you can easily pull up that file, and then just opening the file is like a one-stop shop. Once you just pick up that file, it shows all of this information at a glance. Then another thing you will see on your payroll is deductions, right? So you would see Mary Jo, you have you're raising up your hand. Do you have a question?
Sorry, no.
Okay, thank you. All right. So for the deductions, there are basically two types of deductions you might see on the payroll. It's either you see the statutory deductions, which are like mandated by law that a company should deduct, and then you see like the voluntary deductions. So you see those ones also on the payroll. Then the last thing you see on the payroll, which is the net pay. So the net pay is your gross pay minus your deduction. That's what's going to give you your net pay. So it is gotten after you've deducted all of the various deductions from the gross pay. That is how you get the net pay. Sorry, there was tautology there. Okay, so that's how you get the net pay. So let me just do a recap. 4 basic things to be on the payroll. So in case you're building a payroll from scratch, you want to get the employees' information, all of their details. You want to have like a breakdown of their gross pay. You want to have like a breakdown of the various deductions. And then you want to have like the net pay, which shows their take home. This is how much that is going to your bank account at the end of the month. Okay, so then I mentioned something. So let me go back there. The 4 things that I mentioned, right? This employee information is quite easy. I mean, there's no need to go in depth. We all know what employee information means. Then the gross pay, this is most times determined by the organization. I mean, based on their various policies, you might say this is how much we give as basic pay. So it's really not you shouldn't concern yourself so much about gross pay. It's fixed by the organization. Then the deduction is actually where you come in. So I would be going in depth on the deduction. So for the deduction, there are like 4 main type of statutory deduction that you'd see on any payroll. So the reason why I'm taking my time to explain this payroll deduction is that if you want to function in the capacity of an accountant or an HR person, you must first of all understand this deduction and why they are being deducted, because you cannot be saying you are the one managing payroll and then your staff walks up to you, an employee walks up to you, and then they're asking you questions about, oh, sorry, I noticed this particular deduction on my pay slip. Why is it so? And then you do not have answers because you just feel like they're deducting and they're deducting. So that's why I'm I prepared this slide so that even we ourselves, we can have like insight, and then we can able to explain to whoever needs that explanation as to the reason why this has been deducted. So the first on the list is PAYE. So there's a law based on the Personal Income Tax Act. If you're employed in Nigeria, you are going to pay tax on your employment income, right? So what you pay is PAYE. So what I have here is this is the tax paid to the government on the income made by employees from their paid employment in Nigeria. Okay, this amount is usually deducted at source by the employer and paid to the government on the employee's behalf. So for PAYE, it is a tax that you pay as an employee in Nigeria to the government. It is mandatory, so you do not have a choice into saying whether or not you want to pay. I mean, you don't even get to, you can't choose. Because I've worked in companies where people come and ask me that, is it a must I pay this pay? It is a must. You do not have a choice, right? So it is even deducted from your salary before you get it. So that is for the payee. Then the payee rate is from 7% to 24%. So we use a graduated tax band, and I'm going to explain in like the subsequent slides. That's the first one. One of the first statutory deduction is payee. Then the second one is National Housing Fund. So the National Housing Fund is a contribution made by employees to enable them have access to loans to help them buy or develop their own house. So this is usually 2.5% of employees' basic salary. Although it was changed recently before Buhari left, it's now 2.5% of your gross income. So this National Housing Fund is before this year, it's compulsory, it's statutory, so you have to contribute. And then once you're done contributing, now I'm speaking based on, I'm relating as if I'm speaking to an employee. I'm putting everyone in this class in the position of an employee so that they have the knowledge, and then if an employee comes to work, you can give them the same knowledge. Okay, so how it works is 2.5% of your basic salary is deducted and remitted to the Nigerian Mortgage Bank. And then from there, if you really want to take a loan, there are a series of process you go through. You get a form, you make your application and things like that. So that is what this National Housing Fund is for, right? So before February 2023, it used to be statutory, but right now it is voluntary. It means that companies in the private sectors are not mandated to join this contribution. So if you are in a company, you can tell the company that, please, I'm not interested in NHF, and they would not deduct it from your salary. So that is how it works. Then the next one is pension. I believe we all know what pension is. Well, just like I said, this is a zero knowledge, we're assuming zero knowledge. So pension, this is a contribution that employees make towards their retirement days. It is also deducted as sourced by the employer and remitted to their pension fund administrator on their behalf. So your pension is what you pay against your retirement days. So in Nigeria, we use a contributory scheme, and then your employer pay 10% of your basic housing and transport allowance, and then you yourself, you also contribute 8% of the minimum of your basic housing and transport. So that's for pension. Then the next one is the National Health Insurance Scheme. So this is very similar to the HMO a lot of us know about. I mean, basically, it's like a normal thing now in every organization for them to have HMO. So this is a fund you put towards you contribute so that you can have access to affordable healthcare in case of medical needs or emergency. It's just like the HMO we all know of. So this is backed by the new National Health Insurance Act. It is usually computed at 5% of employee basic salary only. So I think those are the four major type of statutory deductions that you would see on the payroll. So if you put yourself in the capacity of an accountant now, these are the four deductions that you should deduct from the gross income of any of your employees. I don't know if we're clear. Can anybody just signify in the comment section if they are clear? Okay. Thank you,
Yes.
Odwayo. Okay, thank you. Thanks a lot. Okay, somebody is asking, what is BHT? So BHT is an abbreviation for your basic housing and transport. It is a summation of your basic salary, your housing allowance, and your transport allowance. Okay, so I'll just put that in the comment. BHT is basic housing and transport. Okay. All right. Okay, so from these four deductions, I feel like every other one, the NHF is very clear. The pension is very straightforward. I mean, it's just taking 8% of the employee salary, and the NHIS is very straightforward. But the one that is a bit trickish and it gets a lot of people confused is the PAYE. So I'm going to be moving on to the PAYE to explain a bit in depth about it. So one of the questions that a lot of people ask about PAYE is that what income is actually chargeable? Like, what part of my income is chargeable? Is it everything that is chargeable? So what I did is I went to section 1B of Peter, and this is what it says. Any salary, wage, fee, allowance, or other gain or profit from employment, including compensations, bonuses, premiums, benefits, or other perquisites allowed, given or granted to any person, temporary or permanent employee, other than so much of any sum as of expenses incurred by him in the performance of his duty, and from which it is not intended that the employee should make any profit or gain. So in summary, what this is saying is that any money that you make from your employment outside, like, so the only thing that is exempted from PAYE that you would not pay PAYE on, any income that you not pay PAYE on, is probably your gratuity. Maybe you lost your job and then they're compensating you for loss of job. Then maybe they paid you a gratuity. Then reimbursable. Maybe you incurred some personal expenses and then the company had to reimburse you. Those are the only things that will not be taxed. So, but anything like 13th month is taxable. Bonuses is taxable. Benefit in kind, maybe your company gave you a car, you will get the value of that thing and add it to your basic pay to get how much it is taxable. So that is it. Then the applicable rate in Nigeria is the first 300,000 naira of your income is charged at 7%. The next 300,000 is charged at 11%. The next 500,000 is charged at 15%. The next 500,000 is charged at 19%. The next 1.6 million is charged at 21%. And then above 3.2 million is charged at 24%. So let me just take a chill pill here. And then if you have any questions, so just let me know. Let me know if I'm going too fast. Okay, so.
Yes, please come again with the things that are not taxable and taxable. I need a clarification on that because we used to have that argument in my office. Thank you.
Okay, thank you as well. Okay. So someone asks, is overtime also taxable? I would say yes, because it is an income that you made from that employment. I would say yes. I mean, for companies that do not tax overtime, you must have like a strong backing when they come for audits. But to be on the safe side, I would tax it. I would tax the overtime. Yes. Okay. Somebody asked about the things that are not taxable. I said like any money that is paid to you due to like any compensation that is paid to you from like loss of your job is not taxable. Gratuity is not taxable. Reimbursable. So maybe you incur some expenses and then the company had to reimburse you back for it, is not taxable. Now I'm speaking from the capacity of an accountant. So as an accountant, when you're not taxing your reimbursable, what you would need to do is that you get receipts from those employees. So if you're saying if you are paying your employee maybe 30,000 naira reimbursable for, let's say, traveling or something, you would want to get receipt of those traveling, like what exactly they spend that 13,000 naira on, so that tomorrow when they come for tax audits, you have enough evidence to say that this thing is actually reimbursable and it's not just you trying to pay your staff and lying under the quote of it being reimbursable. So we might want to be clear on that. Okay. Okay, so someone said, is COLA taxable according to the Nigerian tax law? Please, you might want to specify what you mean by COLA. This is assuming a zero knowledge approach, okay? If the income chargeable is not up to 300,000, okay, so we'll get to that. What if the salary is less than 300,000? So if the salary is less than 300,000, it means that you pay a minimum tax of 1%. So you pay a minimum tax of 1%. So I was going to explain that when we get to this side where we're preparing like the payroll template, but I mean, it's good that we just put it out here. What about life assurance premium for employees and their spouse? Okay, that is also exempted, and that's based on the new Finance Act. Then for the percentage, are they all applied at the same rates? For example, if the total is more than 300,000, so that is a very fantastic question. So like I said earlier, the payee ban, the tax ban is graduated. So we'll go in depth in this when I go to how we're going to prepare the template, the payroll template. So I would answer your question when we get to that part, but it's a good thing that you're asking now. Please, on the tax table, if a person earns a total package of 3.1, okay, so you will also compute that. You'd see how we compute that. Please, can you give a practical example? Okay, we'll definitely do that. I believe compensation for loss of job above 10 million is taxable. Okay, I might want to confirm that, but what I have here is that compensation for loss of job is not taxable, but I might want to confirm, since you're saying above 10 million, I didn't know there was a peg, but I will check and confirm. Okay, cost of living allowance. So what do you mean by cost of living allowance? is it outside the cost of living allowance? Is it outside your basic, your housing, your transport? I mean, the law is actually very specific about these things. I mean, if they can even tax benefits in kind, so I do not see any reason why your cost of living allowance should not be taxed. Even if your company gives you a house to live, you would get the value of that, the payable rent, the rent you would have paid, and tax it. Okay. So for instance, the company pays 30K as data allowance to staff that work remotely. Is it taxable? Okay, so this is actually debatable whether or not it is taxable. So you can, if you don't want to tax it, you can come under the umbrella that it is a reimbursable. So the company, the employees have incurred expenses of 30,000 for data, and you as the company, you're just reimbursing them for that cost. So it's not like what you pay. It's not like an income to the employee per se. Originally, the company should be the one providing data to the employee, but because of this whole remote mode of working, you're saying that ideally I as the company should be the one providing this data to this employee, but because I'm not providing it, this cost that the employee has incurred to get this data, I'm going to reimburse them for it. So yeah, I don't think it should be taxable. It can actually sit comfortably in reimbursable. What about meal and transport allowance? It is taxable. Okay. So
What about meal and transport? Sorry.
can you say that again?
Meal and transport allowance.
It is taxable, please. Yes, it is.
Thank
Your
you.
meal and transport allowance is taxable. Okay.
Thank you.
You're welcome. Okay, so we'll just move on from here. I think we all have like a general understanding of what this is about. Okay, so the filing requirements. So now we're speaking in the capacity of an accountant. So you're an accountant for a company, and then you're the one that manages the payroll. What are the things that you should be concerned about? What are the filings you should be concerned about? The first one on the list is your payee. So the payee is filed and remitted on the 10th day of the next month. So all of the payee that you deducted from your employees in June, for instance, before the 10th of July, you should remit it. And when you're remitting your payee, it is remitted to the state of residence of the employees, not the state of residence of the company. So a company might be in Akure, for instance, and because of this remote working, they employ people from all over Nigeria. You might have an employee that resides in Lagos. The company is in Akure. They have an employee that resides in Lagos. That payee that they deducted from the employee's money would not go to Akure, right? It will go to Lagos State Internal Revenue Service. Please take note. It's actually very, very important, because if you mix this up, the employee is going to come back for you when they need their TCC and they cannot get it. So it's very, very important. The payee is remitted to the state of residence of the employee, not the state of residence of the company. The company might be in Abuja and I'm in Lagos working for the company. My payee should be remitted to Lagos State. Then the NHF, which is the National Housing Fund, it is remitted in the month following the month of deduction. I checked, right? There are not so strict regulations as to when exactly it should be remitted. But to be on the safe side, I would say while you're remitting your payee, just remit it alongside the 10th day. Then another one is your ITF, your Industrial Training Fund. Okay, so for the Industrial Training Fund, I didn't want to put in a lot of material there. Companies that qualify to pay Industrial Training Fund, first of all, the Industrial Training Fund is paid on an annual basis. So the Industrial Training Fund for 2022, we paid in 2023. The Industrial Training Fund for 2023, we paid in 2024, right? So it is paid 1% of the annual payroll cost is what is paid. For a company that has 25 or more employees. So if you're a company and you have 25 or more employees, then you must pay your ITF. So I think that's basically it. Then the NSITF, which is the Nigeria Social Insurance Trust Fund, this should be paid like before the 16th day following the month of deduction. Then your pension, it is also paid the same day with your payee, the 10th day following the month of deduction. So if you all the pension that you deducted from the employee, both your own contribution as the employer and the contribution of the employee, you add everything together and you pay it to their PFA before the 10th day of the next month. Then the NHIS as well, that is also paid the month following the month of deduction. So there are not so strict regulations as to the date exactly, but I mean, to be on the safe side, just use the 10th. So the 10th day, so you know that by the 10th of every month, before the 10th of every month, you should have paid your payee, your pension, your NHIS, the NHF. So that's about that. I don't know. So let me just move on to the next slide, and then we'll take the question after that. So the payroll template, which is like the icing on this whole thing. So I'm going to be showing you how to build like a payroll template from scratch in Excel. So for you to be able to build a payroll template in Excel, first of all, it means that you have like in-depth understanding of like the basics of how to build a payroll. If you don't know like the basics requirements for building a payroll, you cannot even build it on an Excel. And then the truth is that 70% of SMEs, like small companies, they will require you as an accountant to come up with a payroll template. I mean, you can even get a job tomorrow and then you are like the first accountant and you have to build a payroll template from scratch, right? So you might be lucky to work in a company where they already have a payroll template, but it's something I always say, if you don't know how something is computed, if you don't know the basics of getting something, if there's an issue with that template, you will never be able to tell. So it is also important that you yourself, even if there's a template on ground in your company, you know what goes into the preparation of that template, so that if tomorrow somebody is asking you a question that, oh, why is this, why is this that, you can explain. So it is actually very important for everybody to know how to build a payroll template. So, okay. So let me just see if there are any questions. Please, can you drop your questions in the chat box before we just move on to the payroll template in Excel? Okay, so somebody asks, is ITF charged from the employee's basic salary at the end of the year, or is it the cost on the company? It is the cost on the company. So let me just do a bit of explanation. Now, remember that we all are speaking in the capacity of the accountant of the company, which indirectly makes us like the employer. So I'm speaking in the capacity of the employer, what you're going to be remitting, not for the employee. The basic deduction for the employee are what I listed earlier in this slide. Okay. So these are like the three main deduction you will get from the employee. The three deduction that you take away from the salary of the employee: the payee, the NHF, the pension, and the NHIS. Okay, so that's that. But the ITF, the cost of the ITF is borne solely by the employer. The reason why I put it here is this slide here is to explain everything you're going to remit as an accountant working for a company. So as an accountant, you're assuming the role of the employer. You're working for the employer. So this is all you're going to remit. I think that should answer the question. Okay. So for the ITF, the 25 staff and above threshold for only full staff, I would say yes. So it's not that straightforward. It says for both full staff and temporary staff. So temporary staff that work for more than 30 days. So that's that. What will be the consequence if you don't meet up with this date of remittances? Okay, so I was just trying to make my slides as short as possible, but there are strict deadlines. If you don't meet up with your payee, there are penalties involved. You will pay the government extra. Your pension as well. Each of these remittances, if you don't pay on time, if you don't remit as at the due date, there are penalties involved. So you as an accountant, you might also have to hurry up your treasury department or whoever is in charge of making payments, sing it in their ear. Your payee should be paid latest by 10th of the next month. If you don't pay, you're incurring extra cost for the company. So let me see if there are any other question I haven't answered. So who is responsible for the NSITF? It is the employer. Okay, thank you, Precious. It is the employer. Who is responsible for the ITF? The ITF is also the employer. So to answer these questions, anything that is not in that 4 things that I listed in this first slide, these are the only things that are borne by the employee: payee, NHF, pension, and NHIS. Anyone that is not this 4, you remember that pension is both employer and employee, right? So and then this other one as well, this NHIS, there's a percentage that is contributed by the employer as well. But any other one that you see here that is not here is fully borne by the employer. So let me see if there are any other question. Okay, so what is the guiding law for staff principal place of residence? You find that in Peter. You find that in the Peter, the guiding law here. I believe if meal and transport allowance is paid out salary, it should not be taxable. I really do not understand what that means. Okay. Okay, what happens where we cannot remit to pension fund administrator and payee as a result of staff who do not have pension fund accounts or tax? This question is actually one that, I mean, if you're an accountant and you're handling payroll, you would have encountered issues like this before. And I will tell you, how that I don't feel like any excuse is good enough for this. The truth is, when you're onboarding your employee, if they don't have, I mean, it's very easy to get your taxpayer ID for you to remit your payee during the onboarding stage before you even pay them. Because I mean, if you employ somebody, it will take a time before you pay them their first salary. Get them the form for them to register with a PFA. I mean, it's not good enough excuse that they don't have a PFA. Find the PFA for them, like have a relationship with the PFA as a company. So when you have staff that do not have like a PFA, you can just get the form for them, they fill it, and then their pension code is generated, and it saves you the stress. Because at the end of the day, you know that you as a company, you would need to get your PENCOM certificate, and then when it's time for you to get the certificate, all of this excuse of like, sorry, I did not pay because this particular employee did not have like a PFA, it will not be good enough. It's normal that people, I mean, you might employ somebody that is just fresh out of school, it's understandable, but get them a form. Even if you can't get them a form, like push them to go out there and register with a PFA. Make it a requirement. 7 days into getting a job, you must provide us your taxpayer ID and your PFA. So that is it. Then the taxpayer ID as well. I mean, I have actually experienced that before. I joined a company, I realized that we have like a whole backlog of payee. Why? Because staff don't have like taxpayer ID. I'm like, to get a taxpayer ID in this day in Lagos State would not even take you more than 10 minutes. I mean, okay, if you need me, okay, thank you. So if you need me to like share you like a step on how to get your taxpayer ID, just drop it. I don't know, maybe I'll just share like a step-to-step guide. It's so easy and seamless. Anybody could get their taxpayer ID in less than 10 minutes, and then it saves the company and everybody a whole lot of stress and explanation. So that answers the question. In summary, what I'm trying to say is that there is no good enough excuse for you not to remit your pension and payee because an employee does not have a PFA or pension code. Immediately you onboard a new employee, make sure that they register to get these things because you need it. So I think that answers the question. Okay, I will share it. I may not be able to share it here because I think I've shared it before on LinkedIn. I'm not so sure, but I would find out and I don't know, just follow me on LinkedIn. I'll share it on LinkedIn so you all will see it on LinkedIn. So in the absence of any question, I believe I've treated most of the questions that I have here. In the payee, what does first 300,000 and next 300,000 mean? Okay, so we'll see all that in the next phase. I believe I've answered all of the questions, and then we are okay. Are taxes mistakenly paid into a wrong ID reversible? Because I've been receiving, okay, sorry, because I've been receiving tax from a company I have never worked for. That is actually very serious. That is actually very serious, and it is reversible. Okay, so I worked in a company where there was a mistake, there was a mix-up in the pension code. So they mixed up one of the employees' pension code, and they were paying. So one person was receiving pension for 2 people. He was paying 2 people's pension. It was a mistake, and it did not, like, they didn't notice it until like 6 months later. We were able to reverse it. I mean, we had to write to like the pension, the PFA. It took a lot of back and forth, a lot of letterhead, a lot of emails. But at the end of the day, they were able to help us reverse it. So it is reversible. But I don't know, this is what you're getting from a company you've never worked for. That is serious. I mean, the real owner of the pension, I just feel so sorry for the person. But it is actually reversible. You just need to write to the PFA, explain what happened in your company's letterhead. Then it will tell you like the process you need to go through. We're able to resolve it, even though it took like, let me say like 3 months before we got it resolved, but we resolved it. So that's it. Where the employer decides to bear the pension entirely, I don't know why anybody would why any employer would want to do that. I don't know why any employer wants to do that. So even if the employer wants to bear the burden, they will mark up the employee salary in a way that after deducting. So let's say the employee wants to pay the employer 100,000. So let's say the employer wants to pay the employee 100,000. They don't want to deduct any pension from the person's salary. So it's possible. what you need, what the employer wants is that the net salary of this person should be 100,000, right? And you can work back to get how much the person would be the gross income of the person before deducting those pension and those tax and all of that. It's just a matter of working back. Is NHF refundable? Especially that it is not compulsory, and how can we go about the refund? I mean, that's a question that even me myself have been asking, because I've worked in places where they've deducted NHF from my money. I don't know how this NHF is not so clear, because I have not really seen anybody that's taken a loan from the Nigerian Mortgage Bank because of their NHF. But I mean, there are a couple of steps. I don't think it is refundable per se. You can only apply for loan. Now, what I cannot say is if you pull out of the contribution, whether you still be eligible to apply for the loan. You understand? But I don't think it is refunded. It's not something you can say, I'm not doing it, give me my money. It doesn't work that way. So there are a series of steps online on how you can request for loan and all of these things. But the truth is, we know this is Nigeria, and some of these things are not that straightforward as it seems. But I mean, there are a couple of steps online that one could take. I mean, I've never really utilized my NHF before, and I don't know anybody in my close circle that I have. But so yeah, that's it. What is NSITF? Okay, so your NSITF is Nigeria Social Insurance Trust Fund, and it is 1% of employees' monthly payroll. It is borne by the employer. It is 1% of the employees' monthly payroll. Okay, so somebody is asking, is the CSR still the same as it was before the changes, or there's just a bit of changes and you'll find out soon? Okay, how to go about the refund? Oyidamola, I also need somebody to help me with this, because if I don't think there's a refund, I really do not think so. After paying PAYE, should the various staff PAYE be filed online, monthly or yearly? Please, it should be filed monthly. Don't wait till the end of the year. If you wait till the end of the year, so there's this form that is called Form H1. I think I missed that when I was talking about PAYE. So Form H1 is you file at the end of so let's say for 2022, before by January 2023, you're supposed to, as an employer, you're supposed to file Form H1, which shows like all of the PAYE that you done from your employee salary and the various remittance that you make. But if you're asking about the PAYE that you deduct from people's salary on a month-to-month basis, whether you should wait till the end of the year before you remit and pay it, no, please pay it before the 10th day of the next month. If you don't pay it, there are penalties involved. How do we work back payroll to get gross pay? Okay, so let's let's understand how to work forward. Then we can now see if you can work back. Yeah. Is NHF really compulsory for employee in the private sector? So I mentioned it like as of last year, it was compulsory for everybody, but based on this Business Facilitation Act that Buhari signed before he left, it's no longer compulsory for people in the private sector. It's optional now. So what's the difference between NSITF and ITF? NSITF means Nigeria Social Insurance Trust Fund, and ITF means Industrial Training Fund. So there are two different things. Okay, thank you very much, Yekini Amina. So you said it's not refundable at all, but it can be stopped. I mean, that's the same view that I have. Thank you. So I think we've done justice to a couple of questions, and I just want to be sure that we have like basic understanding, so that by the time we get to the real meaty part of this meeting, we don't have like so much questions. Okay, so I will just go to my Excel, and then I would show us what it looks like. Okay, please, can anybody just unmute and confirm if they can see my screen? Please just confirm if you can see my screen.
Yes, we can see us.
Yes, we can.
Yes, you can see us.
Okay, thank you very much. Okay, so I mean, if you cannot remember what I said there are like 4 components in a payroll. Can anybody just unmute and tell us the 4 things so we can look out for this in this payroll that I'm opening in front of you? I mean, when I started the class, I said there are 4 things. Okay.
Employee information.
Okay.
The gross pay.
Okay.
The deduction and the net pay. Yeah.
Okay, fantastic. Thank you very much. It shows that we're all following. So in this, this is a payroll computation that I have. This is a payroll document that I have. So I'm going to walk you through the process of how I prepared this. I'm going to start with a new sheet, but before I do that, let me just explain. This column A it signifies the employee detail. I mean, it could be more depending on what you want to see on your payroll as an accountant. I just decided to keep it simple for the course of this training. So what I have here is just the name of the employees. Then the next thing that I said you would have is your gross pay, which is a summation of your basic, your housing, your leave allowance, your benefits in kind, and all of those things. So you can see that from your column B to column G. This is the gross pay. This place here, this is where you will have the gross pay. Then I said another thing you would see on a payroll is the deductions. So you will see from column H to column M, you see the various deductions here, your pension, NHIS, NHF, CRF, and all of that. Then at the end of the day, you would see the net pay, which is the annual net income. So I took it a step forward by showing us how much pension you should remit at the end of the month and how much PAYE. Oh, sorry. Okay, so how much pension and how much PAYE you should remit at the end of the month. Then I also did something extra. I mean, in case you do not have like an accounting software that can help you generate your payslip, this is just like a very simple payslip, and it's really linked, it's directly linked to this payroll. So I just picked for one employee, and you can replicate that for your employees. And once they request for that payslip, if you don't have like a software that can help you with that, you just convert this page to PDF and send to them. So that's just it. This is just for knowledge sake. Okay, so for the exercise, we will be building this payroll from scratch. So what I will just be taking from this sheet is I'll be copying, so let's just start. I don't want us to start figuring out the name to use and some other stuff like that. So I'll copy that from this one that I've prepared before now, and then we can just work with that. Okay. So I'll copy the name as well, and then I'll copy the salary breakdown. I don't want us to start figuring that out. I mean, this is something that even you as an accountant, you do not have control over. So the basic, the housing, the transport, the benefits in kind, the 13th month is usually determined by the organization you're working for. So let's say we have like, for the purpose of this training, we're saying we have like, we have 2, 4, 6, we have 7 employees. And then you as an accountant, you are supposed to prepare the payroll, and then they've told you that this is the breakdown of what the company is offering to these people. So you have the basic, they've told you the basic salary, their housing allowance, their transport allowance, their benefits in kind, and their 13th months. Okay, so the next thing you want to do is, first of all, when you're trying to do your payroll, right, it is important. These figures that I have here, it's on a monthly basis. So let me just specify so that there are no confusions, right? Okay. So what the figure that I have here is the monthly, is based on monthly. So this 10,000 naira is what we will earn as his basic salary on a monthly basis. The 5,000 naira is what is housing allowance on a monthly basis. The same for transport, benefits in kind, and 13th month. When you want to start preparing your payroll, it is very, very important. I mean, a lot of people made this mistake. It is very important that you convert the figures that you have here to annual. That is the first step. That is the first step, right? So we'll come down here. I'll just write parameters. So we have 12 months in a year, right? So what I can do is I'll do a sum. I'll do a sum of this, get a figure. So the figure that I have here is their total pay on a monthly basis. It is just the addition of my basic, housing, transport, benefits in kind, and 13th month. I mean, this breakdown could be more than this. Some companies it could just be basic, housing, transport, and others. It could be basic, housing, professional fees, and others. It could be anything. But at the end of the day, just sum it together to get your annual gross pay. This gross pay that I have here right now at the moment is my monthly gross pay. To get the annual, I will just need to multiply it by 12. By 12. So that's what I'm going to do. I will just do that. Okay, so I have the figure already. So this is our annual gross pay. To make it look distinct, I'm just going to color code it in blue. I'm just going to color code it in blue. Okay. Not what I want. This. Okay. I think, I don't know, are we clear on this? Do we have any questions? Are we clear up to this point?
Very clear, ma'am.
Okay, thank you very much. Okay, so now that we've settled the first aspect, which is like the gross pay, we've gotten the gross pay. The next thing that I said would figure out is the deductions, right?
Yes,
And if you notice, okay, thank you very much. And if you notice from my explanation from the slide that I presented, I said like there are like 4 statutory deductions that you would see in an employee's payslip. Can anybody remind us? I mean, everybody's even seeing it on the screen, but I mean, it would be nice for anybody to just do a recap for us, like the 4 basic deductions that you'd likely see on a payslip.
Pay,
Okay.
NHL, pension,
Okay.
NHIS.
Okay, thank you very much. Okay, thank you. Okay, so for the pension, right? So what we're doing right now is so the process we're trying to do is we have the gross income of this Ebube. So let's say we're working with Ebube. You are the accountant. Your MD has told you that, okay, perpetual, we're paying Ebube 1.8 million on an annual basis. Please help us calculate the net pay that we should pay to Ebube at the end of the year or at the end of the month. You know, the net pay is gotten after you deducted all of the deductions. Like, why do I keep using these words, right? Okay, it's gotten after taking out, let me just use that other word, after taking out all of the necessary deductions, right? Okay, so for pension, from the employee's parts, there are 2 parts to the pension. You, the employer, will contribute 10%. The employee will contribute 8%. So it's 8% you're deducting from the employee's salary. So I will just put it down here. Employee pension. It's 8% of basic housing and transport. So for us to get this, we'll use an Excel formula equal to this 8%. So we're going to anchor it in case we want to drag down so that it remains on that cell B20. So 8% times, you open a bracket, your basic plus your housing plus your transport. Let me also add that this is the minimum that you can do. I mean, you could be very generous. An employer could decide that they don't want to do minimum of BHT. They can do like 8% of your total salary, of your total gross pay as your pension. There's nothing you can do. What the law says is the minimum. So they can decide to go above that. You understand? So we're just sticking with the law here. We're assuming that the company will be taking a minimum of 8% of the basic housing and transport. So we close it and that is it. Okay. So if you notice, I mean, the figure that we have for this pension, when we drag down, you would realize that it is actually on a monthly basis. The figure we have here is a monthly pension. And can anybody just explain why I said that this is the monthly pension that we have here?
Because the basic housing and transport are monthly.
Okay, fantastic. Perfect. Yeah. So because the basic housing and transport that I used are monthly, and then it will be a mismatch for us to have like an annual gross income, and then we have our pension in months. If you're preparing, this is not even about payroll template. What if you're making any report or something, you need to stick to a parameter. If you're reporting in monthly, make sure everything is in monthly. If you're reporting in annual, make sure everything is in annual. If you're reporting in days, make sure everything is in days. So we need to convert these figures here to annual. Everybody understand how we got this monthly figure, right? So what we just need to do is multiply everything here by 12, multiply this by 12, multiply this by 12. So I will just use an Excel formula to do that. I'll Ctrl+C this. I'll highlight all this one. I'll come to paste. I'll go to paste special, and then I'll click on multiply. Okay. So it gives us the figure on an annual basis. So I think that explains it. For the NHIS, NHIS is 5% of, it used to be 5%. So it used to be 5% of your basic salary. So I said based on the new Business Facilitation Act, right? It's no longer 5%. It's no longer 5% of your basic salary. It is now 5% of your gross income. 5% of your gross income. Sorry, I don't know. My laptop is a bit slow. Okay. So 5% of your gross income. So what you have here is equal to 5% times gross income. And then you have it. Okay. So, okay. I need to also anchor. I mean, why use 5%? I can as well just link it here in case we want to change it later. So I will anchor the cell B21, which has our 5%. And that gives us the figure. Okay. So I will drag down, and this is the figure we have for our NHIS. Okay, so I would like somebody to unmute and tell us if there is a need for us to multiply this figure by 12. If yes, why? If no, why not, please?
No, because we're using the annual gross income, so it's already multiplied by 12.
Okay, thank you so much. Thank you. Okay, so that explains it. There's no need to multiply by 12, right? So for the NHF is 2.5% of okay, sorry, just give me a minute. I'm coming. I think I might be messing something up. Let me just be sure. Okay. Okay, so apologies, right? The NHIS is 5% of basic salary. It is the NHF that is 2.5% of gross income. Sincerely sorry for that. So this should be 5% of your basic salary. Sorry, I kind of messed that up. Okay. So I mean that would come back here to affect us. So it should be 5% of the basic salary. And then I'll just anchor this first cell. Sorry. Okay. So because the parameter that we use for the basics is in monthly basis, we need to multiply by 12. So I'll just Control-C this 12, then highlight this, I'll come to paste, go to paste special, multiply, okay, and there we go. Okay, so for the NHF, NHF is 2.5% of your gross income. So NHF, which is your National Housing Fund, is 2.5% of your gross income. So equal to 2.5% times annual gross. So we anchor this, and then we have it. So we drag down. And that's it. Okay. Do we have any questions as regard this pension, NHIS, and NHF that we've computed? You could drop your question in the chat box, or you could unmute and just say it. I don't know which one would work fine.
Okay, so I was asking, this NHF, is it 2.5% of gross or basic?
Okay. Any other question?
Good evening. Sorry, I have a question.
Yeah, good evening. Yeah, please proceed.
Yeah, so my question is just a minor question, basically. So for the pension, I was actually wondering how you calculated the pension. You know, I saw you did some, I mean, how you just calculated everything once is what I didn't get. Yeah.
Okay. Any other question? So I'll
Yes.
just answer everything at once.
Yes, please. Good evening.
Yeah, good evening.
I realized that your employee pension, the 8%, you said is on basic housing and transport sum.
Yes, I did. Yeah.
I thought it was on gross, because it's gross that's actually being deducted from mine.
Okay, so I mentioned something while I was in that computation. I said that what the law says is that a minimum of your basic housing transport. Your employer could decide that they want to be kind enough and deduct higher. I don't know whether I'll call it being kind or being unkind, I don't know, but they might decide that they want to deduct higher from you. What the law says is that whatever you want to deduct, it should not be lower than 8% of basic housing and transport. And everybody's just trying to save cost and all of that. So what most employers would do, they will just take 8% of BHT. So, your company is not wrong for taking 8% of your annual gross. You're not wrong.
That's not being kind,
Okay.
though.
It's being kind. It depends on how you want to look at it. In the long run, it's being kind. You enjoy it. It's your money. Yeah, so.
Okay, good evening.
Good evening.
Yeah, I love what you are doing, but my
Thank
only
you.
challenge there is how to use that Excel formula that you are using. I'm not
Okay.
too good at that lockdown and all of
Okay.
that. I don't know how to go
Okay.
about that.
Okay.
Thank you.
Okay. Okay. So for the first question, somebody asked if NHF is 2.5% of gross income. It used to be 2.5% of basic salary before now, but based on the new Business Facilitation Act by Buhari, it is now 2.5% of gross income, NHF. Then the NHIS is still 5% of your basic salary. Right. Okay. So for people complaining about the Excel formula that I'm using, okay, I would stop using that. So because I would just go back to the regular.
Don't stop it. Don't stop it. I just want you to tell me how to go about learning it. Don't stop it, please. Thank you.
Okay, that's fine then. Okay, that's fine. So the other person asked about this pension, how I got it. So I'll just do like a recap on it. So I believe that because I've not gotten any question on annual gross, it means that everybody understood it up to this point. So let me go back to the pension and I'll do a recap upward again. The pension is your pension, the minimum is 8% of basic housing and transports, right? So what I did is I came here to write down the parameters I used such that even when a non-accountant picks up your payroll, they have an insight into what drives some of this figure they are seeing. It's just me. That's how I like to work. I like to make it very transparent. You can such that you can send this payroll to somebody and they don't even need to get in a call with you before they can understand what is in here. So that's the whole essence of this parameter. It's very clear to everybody what is being used to get these figures that we have here. Okay, so for the pension, I said the minimum your company would take is 8% of your basic housing and transport. So we'll do equal to, right? We'll do 8%. You pick your 8%. You're going to anchor this 8%. I don't know another term to use for the anchor, but what it means is that because I'm just going to put the formula in one cell and drag down. If I don't put this $2 sign, lock. Okay, fantastic. Thank you. Okay, so I'm just going to lock this particular cell such that even when I drag down, it is still picking this 8%. So 8% times, I said a minimum of your basic housing and transport. So your basic plus your housing plus your transports. You close this bracket and there we have it. So I've put the formula for the first cell and all I just need to do is drag down and then it replicates in the remaining parts of the cell, right? So remember that the figure of the basic housing and transport that we used is on a monthly basis. And then the figure that we have here is annual. All our parameters, we're going to be working with annual. So it's important that we convert it to annual. So for us to do that, I already have the number of months in a year here to be 12. So what I'm going to do is I'll copy this number 12, I'll Ctrl-C it. Then I'll come here, I'll highlight where I want to apply that 12. When I highlight it, I'll go to my dashboard. I'll go to paste. There's a drop down beside paste. I'll click on paste, right? I'll go to paste special. Once I go to paste special, I'll come under operation. You'll see multiply. Once you click on this, what it means is that this 12, all the figures that I highlighted will multiply by 12. Rather than me having to like do equal to times 12, I just do this and then it multiplies it for me. And I click on OK, and I have the figure. How interesting it is, right? So that explains the pension. Then the NHIS, right? That is 5% of your basic salary. So I'm just going to do that again. We'll pick the 5% here. We're going to lock it. We're going to lock it. 5% of your basic salary times your basic salary that you have here. You click on it and then that's it. But remember that the figure that you have here is on a monthly basis, because the basic salary that you have here is your monthly basic salary. So I'll just do a repetition of what I did for the pension as well. So I'll control C this 12, which is the number of months in a year. I'll highlight this NHIS. I'll come to paste. I will come to paste special. I'll come to multiply. Okay. And then I have my figure, right? Then for the NHF, that is very straightforward. Equal to your NHF is 2.5% of your gross income. You pick the 2.5%, you anchor it with $sign, 2.5% of your gross income. The good thing for us is that we already have our annual gross income. So we just pick the annual gross income and then we click on enter and then we drag down and then we have our figure. Everything sweet and fine. So I believe that with this recap that I've done, because the reason why I'm taking my time to explain this basic is because it's gonna get more in depth. So I don't want us to like have issues with the basic ones, because this next couple of things you're seeing here, this side would need like full 100% concentration. Yeah.
Sorry, I have a question.
What's your question?
How did we get the 13th month? How did we get the 13th month?
Okay, so for the 13th month, all of the figures that are here, I'm assuming is given to us by the company. I did not calculate any of them. So it's the company that decides how much they want to pay as 13th month. Do you understand? This is just me assuming figures. Is that clear? It could vary depending on the company. So I'm just putting in figures here. So you as an accountant, I mean, unless the company tells you to use a certain percentage to arrive at 13th month, usually the HR or whoever is in charge of negotiation minus your pension, minus your NHIS. Okay, I think, good evening. You might just want to hold on so that we're not interrupting like the class. Once I'm done, once I get to a certain point, I would take questions so that we're not interrupting every minute. Thank you. Okay, are we calculating our gross income too? It is because for us to get our PAYE, we need to have this figure, and then you're going to see it soon, right? So I'll just drag down, right? So for you to calculate your PAYE, I'll just write it here. Your PAYE, right? This is the calculation of your PAYE. To calculate your PAYE, it's your gross income minus the statutory deductions, minus your pension, minus your NHIS, minus your NHF, minus your CRF. That's what gives you your chargeable income. You do your gross income minus your pension, minus your NHIS, minus your NHF, minus your CRF. Now, for us to get our CRF is the higher of 1% of your gross income, or 200,000 naira, plus 20% of your gross income. plus 20% of your gross income. The gross income that is referred to here for this 20% is your gross income 2. Is the gross income 2. Yeah. So I don't know if you have any questions based on this, because this is what is going to drive
Please, that gross
the
income
next
too. I don't
computation of.
understand it.
Sorry, can you say that again?
I said that gross income too. I don't get it.
Okay, your gross income 2 is your annual gross income minus your pension, minus your NHIS, minus your NHF. So I'm going to write it down so that everybody can just see it. Gross income 2. Gross income 2 equal to gross income minus your pension, minus your NHIS, minus your NHF. Okay.
Ma, to get your CRF.
Yes, sir.
Yeah. Why are we adding it with the 20% of the gross income too?
So that's what the law says. What you're to get your CRF, your CRF is 200,000, the higher of 200,000, or 1% of your gross income, plus 20% of your gross income. They are together is one line. I was just the one that broke it down like this so that we can take it one step at a time. So for your CRF, this is actually this is a place where I want everybody to pay attention. Your CRF is 1% of your gross income, or 200,000. So what it means is that whether or not, is either you take 1% of your gross income, or you are taking the higher of 1% of your gross income, or 200,000. So let's say your gross income is 1 million naira, and then you take 1% of 1 million naira. So let me just assume your gross income is 1 million naira, right? And then we want to take 1% of it. 1% of this. So you can see that is 10,000 naira. And the law says that you should take the higher, whichever is higher, whether 200,000 naira or 1% of your gross income. In this case, 200,000 naira is higher. So you take 200,000. After taking your 200,000, you will now add 20% of your gross income to it. Those are the two things that make up your CRF. Now, we need to first of all understand it, because all these things that I've explained, I'm not going to be doing it one by one like this. I'll use just one Excel formula to capture all of this in this cell. So I need us to understand this first of all. So does everyone understand what makes up the CRF? If you have any question regarding that, please unmute your mic and ask me now. Thank you.
Hello, ma'am. Good evening, ma'am. Hello.
Yeah, good evening, sir.
Ma,
yeah, good evening, sir. I can hear you.
Firstly, thank you so much for the lecture so far. But my question, my observation is this: I don't know if it is possible. You know, there are some of us that are not opportunity to have system with us presently until when we get to work, and there is a possibility that we might actually forget this formula. So I don't know if it's possible we can share the template. At least if you have the template after the lecture, it will serve as a guide to us, so that when we are preparing us, it will be much easier. So I don't know if after the lecture, if it's possible, if you can share it with us, ma'am. Thank you, ma'am.
Okay, so for that, I don't know the answer I should give to that, because while it's not a problem for me to share the templates, the entire point of this lecture is for you to be able to build the template from scratch by yourself. I mean, the whole point is, with or without Perpetual, with or without anybody, you get a new job, you have all it takes to build a payroll from scratch. You don't need to go about asking for a template from anybody. So what I can do instead is that I may write down all of the formulas that we used for each of these ones, like the ones that will be very complicated, like the Excel formula that I used. And then you go and try it. And then if you have questions, I'll be glad to ask. But I don't want to make the template that easily available. I mean, I want everybody to be able to build their own template from scratch. That's the joy. That's my joy. right? Okay. So let me just move on then.
Hello, good.
Sorry,
Hello.
sorry,
I have
ma.
a question.
Perfectly said, ma.
Okay, thank you. Sorry, somebody was saying something. I'm listening, please.
Hello, good
Please, I have a
evening.
question.
Okay.
Please, I have a question as well. Please, re-explain
You are not very audible. I think you have like
this
something making some
pay
sort of noise in your
deduction
background.
where you said from the formula that variable income
Okay.
or essentially income is equals to gross. How about now? Can you hear me now, please?
I cannot hear you. You're breaking. Can you just drop a chat instead so that I could just
Hello,
read it
can you hear me now,
and
please?
address
The formula I can see on your screen. You swear you said that then pay.
Okay. Yeah. Okay, my internet. Okay, I think you might have to unmute yourself and just drop a chat instead. Okay, yeah, please go ahead.
Hello, ma, can you hear me?
I want to know if we can get the recording of this
Yeah,
class
please
after
go
the
ahead.
class.
I can hear you.
Sorry, I wanted to confirm from
Yeah,
the
I
from the
think
from the
Onida said it's being recorded. So yeah.
hello. Hello, ma.
I don't know if it is my network, but I mean, I'm struggling to like hear you. Yeah, I think, yeah, I can hear you now.
Good evening, everybody. Please, can we all drop our questions in the chat box, right? Like I said earlier, I know it's an interactive class, but to make the class go on well, we can drop all our questions in the chat box so that she can pick it from there and move faster. Because the more everybody is cutting out on the call, right, we'll just be dragging back. So you can just like notify her in the chat box on your questions instead of everybody having to talk, and this will also affect the video quality and the audio quality when we publish the recording. So that's why we always encourage everybody to use the chat box, so it makes the audio clearer than when everybody is trying to unmute themselves, then there are background noises everywhere, then the audio quality of the recording will just be a mess. Please, let's try to use the chat box. Thank you. While we wait for Perpetua to join us back.
Okay, so I'm here. I think maybe it was my network. Okay, so sorry about that. Okay. Okay, so please confirm. Please confirm if you can see my screen.
Not yet. Yeah, I think I'm seeing your cursor, but
Hello.
It's not showing yet. Oh, let me see if I
Hello?
should log out and log in. We can hear you.
It's somehow blank here. We can't see your
We
screen.
can't see your screen.
The screen is blank.
Okay. Okay, I will stop sharing and then reshare again. So let me try again. Okay. Okay. So I've tried sharing again. Let me know if it's better now.
Not yet. We can't still see anything yet.
Okay, I think it's loading. Oh goodness. I mean, what's going on? I guess it's my network.
Okay.
But that's surprising. It was fine up until this moment. So what's going on?
You can check the network on the system itself. If
okay, I will have to stop sharing again and start
okay,
again.
we can see it. We can see it. We can see it.
Okay.
We can see your screen. Hey, I don't know if she had me. We can see your screen.
Yeah, we can see it.
We can see your screen. Hey, I hope she does not. Can see your screen now. Hi, Perpetua. We can see your screen now.
Yeah, thank God. I was just about connecting. I heard you. Thank you. Okay, I'm back now. I sincerely apologize. I honestly don't know what's wrong with MCN here all of a sudden. Please, can anybody hear me?
Yes, we can hear you.
Fine.
Yes, we can hear you.
We can hear you.
Okay, thank God. Let me try and share my screen. Okay. Oyidamola, please, you might want to give me access to share my screen.
Oh, okay, I will now. Sorry about that. All right.
Fine.
Yes, I have.
Okay. Thank you. Please just confirm when you can see my screen. So you can just
We can see it.
hurry up. Thank God. Okay, so back to the CRF. I'll just do a recap of what I said about the CRF. I said that your CRF is the higher of 1% of your gross income or 200,000 plus 20% of your gross income. So what I'm going to do is I will use one Excel formula to capture all of this. So what I'm going to do, the formula is equal to if 1%, so you know the comparison first of all is between 1% of our gross income and 200,000, we're taking the higher, right? So if 1% of my gross income, if 1% of 1.8 million, right? If it is less than 200,000, if it is less than 200,000, then take 200,000, 1, 2, 3, plus 20%. Take 200,000 plus 20% of my gross income too. Right? If not, if 1% of my gross income is higher than 200,000, then take 1% of my gross income plus 20% of my gross income too. Okay, and then we close the bracket. So what I did here is if 1%, so there's a comparison, the rule says that you are taking the higher of 1% of your gross income or 200,000, whichever is higher. So I'm saying that if 1% of my gross income, if it is less than 200,000, then take 200,000 plus 20%, which is the second part of this formula, plus 20% of my gross income too. If my gross income, if 1% of my gross income is higher than 200,000, then please take 1% of my gross income too. Take 1% of my gross income. Sorry. Take 1% of my gross income 1 plus 20% of my gross income 2. And then we have it. Okay. Do you have any questions?
Yes, I do.
Please drop a chat because of the audio. Please drop a chat if you have any question or if we're clear on this, we can move on. Please, I'm waiting for the chat. Do we all understand, or do you want me to repeat it? Or it's clear? Okay, fantastic. Working correctly. We might as well try and do it manually here. So let's do for Ebube Martins. We'll do for Ebube Martins and we'll do for BC Praise to check if the formula is working correctly. You understand? So for Ebube's gross income is 18,000, right? So we're comparing between 200,000 and 18,000. Obviously, 200,000 is higher than 18,000. So gross income too. We get that figure. So we'll add these two together. If we add these two together, you can see that it gave us the figures that we have. The figure that we have there. So that's just to check that our formula is working correctly. Mary Jo, you also have your hands raised. Do you want to unmute and speak? Okay. Yewande, how about you? You have your hands raised. Do you want to unmute and speak? Or is there like a general settings that cannot make you unmute? Oyindamola, please, are you able to unmute and speak?
I'm here. Sorry. Okay, so thank you so much, Papa, for this class. Thank you so much. My question boils down to a case where we have a payroll that is not annual. So we're doing a client's payroll, and on that payroll there were about 700 of them. And some of them were 1 month, 3 months, 4 months, 6 months, 12 months, varying degree. So I'm trying to confirm if what I did was right. So not just create. So what we did was that I annualized the income to 12, and on that, and same as pension, and I because I did on the assumption that everything that was completed was based on the number of months that they have used on the job. So I analyzed everything to 12, and then did everything that needs to be done, completed PAYE. Then was at the point of determining how much PAYE to remit, that we now brought it back to the number of months that each of those employees used. Was that correct?
That's fantastic. That is correct. 100% correct. 100% correct. So regardless of whether the person used 1 month or not, you have to gross it back to annual, again, get the normal monthly, then multiply by how many months they work. You did a very good
Thank you
job.
so much.
Yeah. You're welcome. Okay, so I will just take the explanation for the CRF all over again so that everybody is clear, right? I said that the law states that, it's not me that said it. Your CRF is the higher of 1% of your gross income or 200,000 plus 20% of your gross income. I like to see the CRF as having 2 parts. There's part A and there's part B. The part B says that 1% of your gross income or 200,000, whichever one is higher, take it. You will now come to part B. Whatever figure you got in your part A, add 20% of your gross income to it to get your CRF, right? And that's what I did in this Excel formula that I used. I said that if 1% of our gross income is less than 200,000, which is the part A now that I'm talking about, then take 200,000 for the part A. Then we're moving on to the part B, plus the part B is constant regardless of whether it is less than 200,000 or more than 200,000, plus 20% of your gross income too, which is our K5. If 1% of my annual gross income, if it is greater than 200,000, then please take 1% of my annual gross income for the part A, plus 20% of my gross income too for the part B, and that closes the formula, right? So what I said here is that whenever, even this is not even about this payroll computation, whenever you're using an Excel formula, it's always safe to also check, like do your own manual computation to be sure that this Excel formula is actually working as you intended it to work. So what I did is I said, let us manually compute for a bube to check if the formula that we have for the CRF is working as it should. So we said that for the part A of the CRF, 1% of gross income. So we are trying to do 1% of gross income. So we want to do 1% of gross income for a bube. If we do 1% of gross income for a bube, that's 18,000. So the law says that we should take the higher of 1% of gross income or 200,000. Based on the comparison, 200,000 is higher. So we're taking 200,000, right? The part B says that 20% plus 20% of your gross income too, which is equal to 20% of our gross income too for Ibube. It will give us 331560. If you add the both of them together, 200,000 plus 331560, it will give us 531560, which is the same figure that we have for this, our CRF, right? So moving on to the next thing on the list. Now that we've got CRF, for us to get our chargeable income, remember what is pension minus NHIS minus NHF minus CRF. So to get our chargeable income, we'll do equal to, since our gross income too is already gross income minus pension minus what? Okay, don't worry, let me do that. To get our chargeable income, we'll do our annual gross income minus our pension minus our NHIS minus our NHF. Well, moving on to the next part. This is where we need to like pay 101% attention, because if you miss something out, you might actually miss it. This requires a lot of if formula in Excel, but if you can just get the formula, trust me, it is very easy. It makes life very, very easy. So now, so your first 300,000. Okay. The first 300,000 is at 7. Sorry, my Excel is a bit slow. Is at 7%. The next 300,000 is at 7%, is at 11%. The next 500,000 is at 15%. The next 1.6 million is at 21%. And then anything above 3.2 million is at 24%. Okay. So I'm going to, this place I need to explain because a lot of people make mistake here, right? So I'll just explain this part in detail. Okay. So now speaking to the tax band, one of the questions that I've asked, that I've seen a lot of people ask the most is that they'll come and ask me that, okay, if my salary is maybe my chargeable income, this thing is a graduating tax band. And it is not a one rate. It's not, so the purpose of this tax band is not to say that if your chargeable income is 700,000, you come and you find a rate for 700,000 here and use it. Or if your chargeable income is 1.6 million, you use 21%. No, that is not how it worked. So before I get into the detail of this other part we're trying to compute, I'll use two examples. So let's assume somebody has a chargeable income of 700,000. So what is going to be how are you going to apply the PAYE? Then we also do another assumption of where somebody has a chargeable income of how are we going to apply the PAYE? So this is scenario A and this is scenario B. So for the scenario A, this person has a chargeable income of 700,000, right? We'll come here. Our tax band says that the first 300,000 out of this your 700,000, you will charge it at 7%. So we'll come here. This is scenario A we're working on. We'll come here. We'll say that 300,000. Okay, let me do something. I'll call this income P. Okay, so we're doing for this first scenario where the person has 3 million, right? So let me just contribute. So let's start with scenario A, which is 3 million. So we'll put the 300,000 here. We should use 7%. 7%. Sorry. My Excel is dragging. It's dragging really bad. 7%. Okay. Now we've taken 300,000. We've taken 300,000 from this your 3 million, right? This is something left, Abi. The next 300,000 from this your 3. The next 300,000. You will charge it as what? At what? 11%. Right? Now we've taken 600,000 from this our 3 million, right? We still have more money left. The next 500,000 from this your 3 million. The next 500,000, we charge it at what? 15%, right? Now, right, 15%. Now we've taken our money because we still have balance 1100,000 at what? At 19%. If you add everything together, this is just 1.6 million, right? So this is 1.6 million. Equal to 3 million minus 1.6 million. The balance we have is 1.4 million, right? So that next 1.4 million, now you're not going to come and take this 1.6 million. You come and you take this balance that you have, 1.4 million. And I'm going to explain something. Let me just do this. You take this 1.4 1.4 million, and that is going to be at 21%, right? The idea is that at the end of the day, you're just splitting what this old tax band works, how it works is that you're splitting your income between these different tax rates. And at the end of the day, the summation of all of these tax band that you've used, it should not be more than how much you are actually earning. It should not be more than how much your chargeable income is. Pardon me. Okay, so you can see that our chargeable income is still 3 million. So we just broke that 2 million into 300,000, 300,000, 500,000, 500,000, and 1.4 million. Do you understand? So your payee is going to be equal to this times this times this. I will drag down. So your total payee is 518,000. So somebody that
Your
has
screen is hanging, ma.
Okay, please go ahead. You said what? Hello?
Your screen is hanging.
Oyindamola, please confirm if you can hear me.
It's not in line with
Can hear
what
you, your
you
voice
Really?
What you are saying,
Okay.
moving along with
Is
your
it better now?
Let me
Can you see
hear
my
you.
cursor
Yeah.
moving? Alban,
Hello, Perpetual.
to myself. Oh my goodness.
Your screen has
Okay,
been hanging
that
for
means
a
it's a bit delayed, right?
We've been lost, though. We've been lost.
Mistaken. Yeah, I can hear you.
Your screen has been
Oh, and nobody called
hanging.
my attention to it.
They were calling, everyone was calling, but it was like you were lost in explanation.
Okay. Perpetua, can you hear me? I guess what we can do is maybe she'll have to help us record it. Then we'll now send it to everybody, right? Like this is the only part that is left. Let me just check with her offline, then confirm. Since the network is lagging, I think the network is really bad at her end.
Please, if she can record from CRF.
Yes, I think if she can record it, yeah. Let me reach out to her.
Explanation is very important.
From
And she will
CRF.
explain and record.
The
Like she will
aspect that we
explain
are
and
waiting for
record.
is actually the computation of that payee for individual, which she has started, and we didn't get her at all.
And so I was saying if she could like record it and like share with us like later or something, like when our network is better, so that everybody can just have access to it.
Okay.
Let me chat up and see, because the network is really lagging.
Please, how do we all get how will everyone get the recording? It will be shared.
So it will be on our it will be on our YouTube page. So we'll be posting the video on our YouTube page. I'll share the link, so just subscribe to it so that we are posting the recording now, so that everybody can have access to it. So let me chat up and see, because this recording is already taking time. Let me see.